I want to get a bit more on these Citigroup results. Missing on the bottom line, but also revenues came in just a little bit lighter than what Wall Street had expected. I want to bring in now Charles Peabody. He's one of the most accurate forecasters of Citi shares. And Charles, what do you make of these results so far?
Well, the bottom line is they were weak. They certainly missed on revenues with about $18.4 billion versus our expectation of $20.4 billion. And even if you add back $1.1 billion of CVA adjustments, which are volatile and not operating, you're still missing. Bottom line of 4 cents again misses our 7 cent versus Street 8 cents. So it was a weak quarter all around, I thought.
It was a weak quarter, and the stock, Charles, as you know, has gone up something like fourfold since the bottom in 2009. Is this a case where investors got a little bit ahead of expectations here at Citi?
They may have. I mean, we're entering what I would call a transition period where buying the shares at discounts to tangible book gave you a value play. Now we have to start to see some earnings momentum. And they put out there a $20 billion figure and a 1.5% ROA that they can earn at some point in the future. And we're not anywhere close to that.
Okay, so then what does Vikram Pandit have to do at this point? I mean, emerging markets still relatively weak compared to what they're seeing in North American consumer banking. What does Vikram have to do specifically?
Well, they're relying on the international franchise to drive above average growth. I think they're talking about 5% compounded annual growth on the balance sheet. So you do need that international franchise to pick up its pace. And then you're going to see significant earnings leverage from improving credit quality. That was the one bright spot in the quarter, is credit quality really improved. You had non-performing assets down 13%. You had your fifth consecutive quarter of sequential decline in charge-offs.
Right.
And so they had a reserve release of $2.3 billion.
But Charles, is it time for something draconian here at Citigroup?
I don't think it requires draconian. I think Pandit has been doing the right things. It's just going to take time. We've entered a period where now it's going to be a slog. Well,
I mean, does this at all question in any way Vikram Pandit's strategy?
No, I think he's chosen the right strategy. I just think you reach a point where you haven't invested in the franchise for a number of years, and now you have to spend, and you're dependent upon the general economy, which is sluggish at best.
Okay, so then does that mean that Citigroup still stays a buy then? Do you buy on this dip?
Well, this quarter has to be examined further. There was some weakness, and it is going to take some time to ramp up the earnings in a positive way.
All right. Charlie, thank you very much. I appreciate it. Charlie Peabody of Portales Partners.